From the heart of where innovation, money, and power collide, in Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, a record June quarter for Apple, beating on revenue despite headwinds from a strengthening dollar, China lockdowns, and an expected slowdown in consumer spending. The iPhone also topping estimates, but supply constraints hitting the Mac and the iPad. I spoke to Apple CEO Tim Cook, and we'll tell you what he had to say. Plus, Amazon surging in late trading after providing a strong outlook for the third quarter, a much different forecast than other retailers. Net sales jumping in the second quarter, in part thanks to Prime Day shoppers. We'll dig in to the data. And the largest chip maker for mobile devices is warning of a slowdown in spending. We will ask Qualcomm CEO Cristiano Amon about the company's weaker than expected forecast, the CHIPS Act, and China. He's my guest later this hour. All of that in a moment, but first I want to get a look at the markets and another big day for tech results. Apple and Amazon out after the bell, and we're seeing some green. Ed, Bloomberg's Ed Ludlow.
This is the day we've all been waiting for. Apple up 4%, narrowly beating on the top and bottom line. Strength in iPhone, iPad. It missed on Mac wearables. Interestingly, it missed on services as well, which was an area analysts hoped would be an area of strength. It looks like the affluent consumer, the rich consumer at the upper end of the market's holding up well. We've had that conversation with Tim Cook, which we're going to go into detail, but macroeconomic headwinds in the third quarter. Go to Amazon. Amazon, there is no doubt, surging in after hours. Frankly, on a very strong outlook for the third quarter. Overall, net sales beat. Pockets of strength, ironically, in brick and mortar. Online sales missed. North America a beat, but strength in AWS, strength in advertising. A lot of staying power for Amazon, showing that it has room to grow. Look at that, up almost 13% in after hours. Really interesting, because the opposite of what we saw from other retailers like Walmart and Target, who preemptively cut their outlooks on concerns consumers were shifting their spending from discretionary to essential items. But there's this idea, right, that the shopper on Amazon and the Prime subscriber is a higher income earner that's immune or a little bit less, open to the headwinds they're seeing in regards to inflation. And then Intel, it just keeps coming. Intel, a really big miss on the top and bottom line. It looks like there's been a big drop in demand from PCs and data centers, that sales of those areas have dropped off. We're down 8%. And more worryingly, we also see Intel cutting its forecasts for this fiscal year. Really worrying. On a day where we're trying to make sense of the global economy, you look at the session, the actual session during Thursday, we got data that showed the US economy contracted for a second consecutive quarter, but it was a day where bad news was good news. You look at the NASDAQ 100 up 0.9%. This was one of the best two-day rallies post-Fed meeting that we've ever seen in the US equity markets. Really interesting to see this pullback in yields, down almost 11 basis points following that GDP print, and Bitcoin kind of caught up in this risk-on mentality despite that weak and worrying economic data. Now you have Amazon and Apple to add to the mix. I cannot wait for Friday.
All right, Ed Ludlow, thank you. I want to continue with Apple now. For that, we've got Julie Osk with us, principal analyst at Forrester Research. And Julie, I did just get off the phone with Tim Cook, and we walked through the results. I mean, clearly we're seeing a record June quarter in terms of revenue, iPhone particularly strong. He said iPad demand also very strong, but that the iPad and Mac were held back by supply constraints. It also sounds like the macroeconomic environment is impacting wearables, which would make sense given its more discretionary items. And when it comes to services, he talked about digital ad spend, and we're seeing the macro environment. They're seeing the macro economic environment have an impact there. What are your headline takeaways?
Yeah, so I think the first one is the good news. So like many other companies, Apple faces the same headwinds that you already mentioned: the recession, it's inflation, it's uncertainty, it's the supply chain, and so forth. I think Apple benefits, though, in a few ways. The first one is about 2/3 of its sales come from smartphones. Folks consider that to be a necessary device, and they upgrade that far more frequently than they do a PC or a tablet or the other devices that they own. And the second thing that you already mentioned, or you and Emily, you and Ed mentioned, that I think is really important, is Apple does have a more affluent customer base. When you look in the United States, the iPhone owner has a household income that on average is $18,000 higher than an Android owner. 35% of their households have an income of more than 100 grand, and they're 3 times as likely to have an income of more than $300,000 a year. So Apple does benefit from having a more affluent customer base in the United States and abroad.
Now, this was interesting from Tim Cook. He said they expect revenue to accelerate in the September quarter, despite seeing some softness in some areas. He said they do believe there were some macroeconomic headwinds that affected the business in the June quarter that I already discussed, but sounded optimistic despite some of the softness that we've seen. You know, I was trying to get him to give me a real take on whether or not we're going into a recession, and, you know, always hesitant to try to sound like an economist. But what's your takeaway from that?
So if I were Tim Cook, I would also be optimistic. I think if we look specifically at the U.S. market, which also has a lot of parallels globally, almost 60% of U.S. consumers own an Apple device. So they're likely to buy a second. They're likely to buy into some of the streaming services, use Apple Pay, and use some of the, in the category that's growing the fastest for Apple. The second thing that we know that is about 18 or 19% of consumers only own Apple devices and are very locked into that ecosystem. So while generally all companies are facing some headwinds, Apple's looking and has a customer base that's, that should help them, sail through here a little bit easier than some of their competitors.
Now, supply was another point of optimism in this discussion. When you look at the numbers, of course, we remember last quarter, Apple said that they would expect $4 to $8 billion. You could potentially, just shave that off the top due to supply constraints. He said it actually ended up being lower than the lower end of that range. And he also said they saw, quote, significant improvement in the month of June in China on the supply side and the demand side. He specifically talked about strong demand around the June 18th holiday, the big shopping holiday in China, said they're seeing strong results there. And they're about to start a big promotion in China, a fairly rare sales promotion where a series of Apple devices will be discounted for a few days. And he said that had nothing to do with clearing inventory. What does that signal to you about the state of play in China?
Well, he said, I'm not a specialist on the Chinese market, but it does, indicate, I think it looks like they're willing to invest a bit. China's a gigantic market, and Apple has always been compared to the Chinese incumbents, it's been a relatively small player. So I think it's worthwhile for Apple to invest there and try to grow that base. Because one of the things that we know about people with Apple products, if you can get them to buy one, they're more likely to buy 2 or 3, and then they're more likely to buy into the services. So I do think it's an important market for Apple to invest in and try to gain some ground, especially starting with smartphones in that market.
Now, a key question has been, how are they going to invest if indeed we are looking at a recession ahead? Our Mark Gurman has reported that Apple plans to slow hiring, slow spending in some areas across some teams next year, which is a little less drastic than what we've seen, certainly layoffs. We've seen hiring freezes at other big tech companies. Cook says, we believe in investing through downturns. We've always done that and found that's made us stronger on the other side. Obviously, we're being deliberate in our decisions of where to invest. What do you make of that word, deliberate?
So if I were to try to guess what Tim Cook is thinking, and if I were to say deliberate, I would either be focused on things that consumers notice, which is the hardware, right? There's a lot of upgrades and a lot of things that every company is doing involving artificial intelligence, anticipating what I need, getting better at like loyalty and security and things like that. I think some of those things consumers are less likely to notice. So if I were him, I'd be investing in the hardware side because that's what really pops for consumers. And then there's some other things that simply have a long lead time, whether it's things like augmented reality or the metaverse or like payments. There's a lot of things that if you pause now, it has a longer, it has a bigger impact further down the road. So I would be focused on, continuing to work on those things where there's still like a lot of ways to go. Take, for example, payments. They've almost doubled the number of people using Apple Pay in the United States and the UK in the past 2 years during the pandemic. Nothing to expect but upside in some of those categories like that. So I wouldn't want to slow down, the number of places Apple Pay is accepted, for example.
He did actually also emphasize the number of people, new rising numbers of people using Apple services, rising numbers of people switching to the Apple platform, the iOS platform. and singled out the fact that a lot of these people are totally new to the Apple platform, totally new to iOS. So we're listening into the Apple earnings call. We'll let you know if Tim Cook has any additional things of interest to say. Julie Osk, Forrester Research Principal Analyst, always great to have your instant reaction here on the show. Thank you. All right, coming up, Amazon pops after a stellar quarter. We're going to have all the details next. This is Bloomberg. Let's now get a deeper look at Amazon results, also in strong and beating analyst estimates. I want to bring in Tom Forte, Managing Director at D.A. Davidson, who has a buy rating on both Apple and Amazon. So, Tom, I think let's look at the top line here in that, the sales and sales forecasts better than expected. This after we've seen pretty dismal results from Walmart, for example. Why is Amazon somehow bucking the trend?
So I think for Amazon, it greatly benefited in the second quarter from strong cloud computing sales and strong advertising sales. Then when you think about the outlook for the third quarter, having Prime Day this year in the third quarter versus the second quarter last year was clearly a needle mover. They had talked when they reported the prior quarter that Prime had about a 400 basis point impact on their sales growth. So I think it's a combination of June quarter, cloud computing and advertising, September quarter, Prime Day, which is booming the sales for Amazon.
So when you take out Prime Day, how well positioned is Amazon really? And I know we've got another one coming up later this year, but if we think solely about the health of consumers in an inflationary environment where they're paying more for gas and groceries, how does Amazon fare?
So Amazon's actually not well suited for inflation. So when you think about Amazon, 56% of their units sale were third party. So generally speaking, that means those products are being sold by someone other than Amazon, and then they're less likely to raise price, given that they're not going to want to lose the buy box to another competitor trying to sell on Amazon. And yes, they have Whole Foods, and yes, they sell some food or less discretionary products on Amazon. But generally speaking, inflation's been tough for Amazon, a tough challenge for Amazon.
Is Amazon in a better position, though, obviously because they've got AWS and the cloud computing unit, something that Walmart and Target don't have?
The answer is absolutely. So if you look at Amazon, and again, going back to their third-party unit sales, I think that their relative profitability is clearly the highest on cloud computing and very strong in advertising, and then much higher on the third-party retail sales than when Amazon's the seller of record. So when you compare them versus Walmart and Target, cloud computing helps, but it also helps to have a large percentage of their sales from third parties rather than from Amazon.
Let's talk about, though, some of the challenges that Amazon has had coming out of a couple of years of pandemic spending, where even they have said they grew too fast, they built out warehouse capacity too quickly, and they haven't been able to fill that space. How much of a headwind is that going to continue to be?
It is a headwind. I think the data suggested they had about 100,000 less employees between the March quarter and the June quarter. So Amazon's been a little more nimble in adjusting either headcount or future square footage than I expected when it came to their fulfillment centers and their employees at the fulfillment center level. But I do think if you look at Amazon through the lens of Shopify, Shopify also felt like it was overstaffed for current e-commerce demand and had a 10% reduction in force. So I think of Amazon, I think of Shopify as two examples of e-commerce companies that are acknowledging that right now they've got too much capacity and their headcount's probably too high.
Yeah, certainly big news about Shopify's layoffs. I want to talk to you a little bit about my call with Apple CEO Tim Cook. You cover Apple as well. The highlights, he said, they continue to expect revenue to accelerate in the September quarter, despite seeing some softness in some areas. He also said they saw a significant improvement in the month of June in supply and demand in China. And this I thought was particularly interesting when it came to spending and hiring plans, which Bloomberg has reported they plan to slow hiring and spending in some areas next year. He said they believe in investing through downturns, but will continue to be, quote, deliberate about their decisions of where to invest. What's your takeaway from all of that?
Sure. So I think for Apple, the question has been for a while, how serious are they about getting into electronic vehicles, and what do they want to do in the metaverse? So when I interpret your comments from Tim Cook on deliberate investment spend, I'm thinking about the future product roadmap. To what extent do they intend to get into electronic vehicles, augmented reality, virtual reality? We know their natural investment cycle for the next generation iPhone and other devices, but to what extent do they want to expand into new categories, and how will that dictate their investment spend?
What do you think the answer to that question is? I mean, do they lean into cars and the metaverse or not right now, given the economic circumstances?
My expectation for both over the long term is certainly yes. So if you look at Apple's history, they're not the first entrant often into a new category, smartphones being the best example, but they're often the second entrant and a later significant entrant. So if you compare Tesla versus Apple, I'm of the belief that longer term, they will have a car. It'll be more than just Apple Play within the car. For Metaverse, I clearly think they're going to have some sort of headset or other device. Otherwise, they're leaving it wide open for Facebook/Meta to disrupt them, which I think would be a big mistake.
All right, Tom Forte, D.A. Davidson, always good to have you on the show, Tom. Thanks for weighing in. All right, coming up, a closer look at the investment climate in China right now. So many factors at play in a big call between President Biden and President Xi Jinping. We'll dig in next. This is Bloomberg. President Biden and Chinese President Xi Jinping held a 2-hour call Thursday talking about a range of issues from Taiwan to the war in Ukraine. Biden reiterated support for the One China policy and both agreed to more talks about energy and food. President Biden is trying to find new ways to work with China as well as strategies to contain the country's global influence. Aides were directed to plan an in-person meeting between the two leaders. Amy Selico is a principal at Albright Stonebridge Group and joins us now to discuss. So, Amy, what are your takeaways from the headlines out of this call? It sounds like tensions were calmed rather than inflamed.
I think that's right, Emily. The important thing was having the call. The U.S.-China relationship is so contentious. Tensions are running so high that there are few members of the two governments who can talk and have frank conversation, raise issues in a constructive way. The two presidents can. They have a longstanding relationship. And unfortunately, the state of the relationship in some ways rests on them continuing as they did today for the 5th time since President Biden has been in office, just to level set the relationship, frankly exchange views on areas where they fundamentally disagree and are continuing to work at cross purposes, but always raising the very important point that confrontation should not veer into the military zone. Competition is fine, disagreements are fine, and can be managed as long as they don't actually explode over a crisis like on Taiwan.
Well, now you have House Speaker Nancy Pelosi seemingly determined to visit Taiwan, and obviously the Chinese government has strongly expressed their disapproval of this visit. I mean, is this a good idea? What are the consequences going to be if she indeed goes through with this trip?
Well, it's not unprecedented that the Speaker of the House visits Taiwan. That happened 25 years ago. Newt Gingrich did so. But of course, the U.S.-China relationship was in a very different place 25 years ago. And so that's right. The timing of the visit is particularly challenging because here in Washington, we continue to ramp up areas of competition with China. We continue to complain about bad Chinese behavior, including more and more aggressive and assertive actions vis-a-vis Taiwan. And so in Beijing, there's a view that this visit is a provocation to demonstrate more official support for the government. And of course, it's 3 months before China's having a major leadership meeting. And so what continues to be stressed is that, exactly as you said, Emily, the timing is bad for Speaker Pelosi to be going right now. That doesn't mean she won't go. It doesn't mean it's going to lead to a disaster. But indeed, the Chinese government has been vociferous in saying there could be consequences for her taking that action.
At the same time, you've got this $280 billion manufacturing bill that would bring chip production to the United States and a broader deglobalization trend that I'm sure China can't be happy with. How does that play into this?
Well, in fact, the omnibus China bill was stopped in Congress. And so the bill that you just mentioned, the Chips Plus Science bill, is only one small part of that larger China bill. And so the elements of the bill, of course, reinforcing and invigorating the ability of the United States to manufacture semiconductor chips, conduct R&D here in the United States through funding from the government, are all meant to enhance competitiveness with China, but they're not. What's not in the bill are some of those provisions that we're going to seek to earlier have the delisting of Chinese companies from American stock exchanges if China didn't comply with these audit rules that they've been dragging their feet on, and a potential outbound investment screening process. So this bill is actually very targeted just on American competition with China and not on constraining American engagement with China. I think the Chinese government, although they wouldn't want to say it this way, is probably a little relieved this is what was passed by the House today after the Senate vote.
Interesting. And last quick question. Obviously, we're seeing now Alibaba move to this Hong Kong listing. SEC Chair Gary Gensler says a U.S.-China deal needs to happen so more of these delistings don't happen. Is a deal a possibility?
It's absolutely a possibility. The two sides continue to work very much at it. I think there's certainly posturing by both the SEC and the Chinese CSRC on what they want. The Chinese want some exceptions from across the board requirements that all Chinese listed companies face audit inspections by the U.S. The U.S. is holding firm, saying you've had that exception for much too long. We want you to comply. I think the talk about it not happening is a little bit too quick. There's still hope there.
All right, Amy Selico, Albright Stonebridge. Always good to have you here, Amy. Thank you for joining us. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. On Capitol Hill, the House just passed a bill that includes $52 billion for U.S. chip manufacturers. It's already passed the Senate, and now the bill goes to the White House for President Biden to sign into law. This is a major legislative victory for President Biden after the U.S. chip industry has steadily lost ground to overseas rivals and, of course, China in recent years. I want to bring in Qualcomm CEO Cristiano Amon for more on this and the company's earnings results. Cristiano, great to have you back with us. We're going to talk about earnings, but I have to ask you about the CHIPS Act and just how transformational you think this could potentially be to the industry.
Look, this is great news for the United States semiconductor industry, as well as the global semiconductor industry. We need more chip manufacturing. We understand that chips are important, actually an essential technology now for our digital economy. And a company like Qualcomm, which is the largest fabless semiconductor company, we need more manufacturing of chips. So we're very happy about that. And we are the #1 customers, a company like Samsung Foundry in Korea, one of the top 2 customers of TSMC, the other one being Apple in Taiwan, and to have more manufacturing capacity in different geographies with even more suppliers such as Intel. That's great news for the industry. So we're very excited about that, even though we're not a direct beneficiary of the funds, but it creates more capacity and supply for our chips.
Would this head off supply disruptions like those we've seen with COVID?
I think the way to think about this, because this is not going to have any short-term impact. This is about building a more resilient and geographically diverse supply chain for semiconductors. So over time, I think we're going to build the infrastructure in place that will allow us to continue to grow as an industry and have a more resilient supply chain.
So let's talk about your results. A beat on earnings, but the guidance came in a little light. You talked about a challenging macro environment. You said the smartphone market will be smaller than forecast. Let's talk about that word challenging. Just how challenging do you expect the macro environment to continue to be?
I'll talk about that, but I'm also going to talk about what's good. We have macroeconomic headwinds. So if you look at what we did in the quarter, it was really a beat top and bottom, but we more cautious about what is the future outlook when we guide Q4 in line with everybody else. Because of the macroeconomic headwinds, we know that it can have an impact on consumer spending. So we're calling that the mobile market is going to be, smaller. It's a market that is mature. It grows single digits. It's going to be smaller as we look at the consumer spending softness. But the good thing about the results is we saw record auto and IoT, which is the diversification strategy of Qualcomm working. We guided for the next quarter sequential growth in auto and IoT, which we expect to be new records. And we're somewhat insulated from what happened in the market because we're concentrated more in premium and high tiers, and that proven to be resilient. And I think that's probably outlined in Apple results as well.
Well, that's my next question, because you talked about how the smartphone market is going to be smaller than forecast, but that the high end is holding up. Does that mean iPhone, that it is the iPhone that is carrying a lot of the growth right now?
It's across all premium devices, from iPhone to also Galaxy series from Samsung, the premium devices from Vivo, Oppo, Xiaomi, OnePlus, etc. What is really happening is we have a mature smartphone user base. And people, when they think about buying their next device, they want a better device. So what we have seen towards several quarters in the year is the mix continue to improve. And our strategy to really focus on share of wallet and premium and high tiers really working out as we see, the improvement and the resilience of the premium tier. And that leads to the great, I think, announcement we have in the quarter, which is our Samsung agreement. And happy to talk about that. Actually, for me, that was the key highlights of the Qualcomm quarter.
So let's talk about that. You extended this big licensing agreement with Samsung, and there has been concern that Samsung is making more of its own chips. What does this mean for Qualcomm's market share, and why are they betting on you for so many more years? I mean, this is quite a long agreement.
This agreement actually put a lot of things to rest, and let me unpack that for you. The first one, it is an extension, very simple extension of existing patent license agreement with Samsung for a licensing business. It extends all the way to 2030 on the same royalty terms and actually includes 6G. So I cannot think of anything else that will give that much indication of stability in our licensing business and is a great benchmark for renewals. The second part of the announcement, it's actually the most exciting one, which talks about the growth opportunities, and really is a multi-year agreement that we are going to be powering the Galaxy product lines with Samsung globally. Let me walk you to this. Galaxy S21, our share versus their in-house solution was in the order of 40%. Galaxy S22, we climb up to about 75%. The upcoming products, which will be impacted by this agreement, you see that share of Qualcomm going increasing more than 75%, where we're going to be powering their solutions globally. And that's very exciting. So if you have any questions about concern about the Qualcomm partnership with Samsung as related to their use and their internal solution, I think this agreement put that to the rest. It's a multi-year agreement. Very excited about that, and we'll continue to validate our strategy to be focused on premium and high tier.
Okay, let's talk a little bit about supply. I just got off the phone with Apple CEO Tim Cook, who said they've seen, quote, significant improvement on the supply and the demand side in China. What are you seeing in the supply chain? Is it going to get better? Is it going to get worse? And how much longer are supply issues going to be with us?
Look, we were one of the few companies to call the supply shortage early on, and we took action early on. We also said that we expect the supply demand to normalize in the second half of 2022. If you go back several quarters and look at some of my comments, and exactly what's happening. We're seeing exactly the same thing. As we had indicated, we see now a much more balanced demand and supply equation. There are still pockets of shortages in some areas, but they are small in the bigger thing. And we are seeing, as we guide with caution the next quarter on the mobile market, the impact of macroeconomics and the China lockdown. But we all know, I think those lockdowns, they come and they go, and we expect the China market to bounce back. So very consistent, and it's, we're being prudent, but it is very likely a situation that we continue to see growth. And with that, we actually guided 24% year-over-year growth in Q4.
Now, we've heard from a number of different CEOs fairly dire predictions about the future of the economy. Elon Musk has said he has a super bad feeling about the economy. Jamie Dimon says he's preparing for an economic hurricane. You've got the World Bank slashing their global growth forecasts. What's your take on the economy? How concerned are you? Is Qualcomm preparing for a recession?
Look, it's very difficult to predict, and I have been very focused on the things that we can control. But what you actually see us doing is really focus on what's important for Qualcomm in the long term. And I can actually unpack that in just this quarter alone and how we guided Q4. The Samsung agreement, it's about bringing long-term stability to our position in the premium tier in the market. The market's going to go up and down as we have a mature phone market, but Qualcomm is growing structurally. That's why we're going to end up the year with almost 50% year-over-year growth in the phone market. But the most important thing is how we've been very active diversifying the company with auto and IoT. And what we said in the quarter is we have record auto and IoT growth with sequential growth projections for the next quarter. And we're seeing that the enterprise and industrial segment has been very resilient. So while you have economic headwinds that provide soften in consumer spending, the industrial and enterprise is strong. You've seen that for other companies that are being focused also on the enterprise like Microsoft. And the reality is digital transformation of the edge, it's somewhat recession-proof, but we will see.
So here's the question. I mean, you're pushing into cars, you're pushing into networks, you're pushing into computers, but will you be able to grow those businesses fast enough to weather what could be a serious near-term economic downturn?
We kind of size from what we saw in the coming quarter. We did size, we call about 20 cents of EPS could be the size of the macroeconomic headwinds on consumer. But even with that, we're projecting growth of 24%. And I think that's because Qualcomm has a number of drivers of growth, which is driven by secular transformation as devices become connected, they become more intelligent, and it's happening, in a number of different verticals of the industry. And we expect that to continue, even though as we navigate to those challenging times.
All right. Qualcomm CEO Cristiano Amon, always good to have you here. Thanks for sharing your view of the future with us. Appreciate it. All right, coming up, El Salvador's big bet on Bitcoin as the crypto world is going through a winter. What's that bet worth now? We'll discuss. This is Bloomberg. It is time now for our crypto report, and I want to turn to El Salvador. The country's finance minister defended its strategy to adopt Bitcoin as legal tender and even doubled down on its plans to build a Bitcoin city, as critics are urging the country to ditch this whole experiment with the main cryptocurrency suffering badly through a bear market. Let's break it all down now with Bloomberg's Michael McDonald, who has been following El Salvador's Bitcoin bet very closely, and our own crypto contributor, Sonali Bostic. Michael, how's it going in El Salvador? Obviously, there's a crypto winter going on, but don't think winter is ever too bad in El Salvador. Is their Bitcoin bet paying off?
Yeah, I think the crypto winter has sort of cooled enthusiasm a little bit on the ground in El Salvador, at least among your average El Salvadorian. The price when they adopted Bitcoin as legal tender last year was near record highs, around 60,000. It's now trading at around 20,000. So I think that's discouraged a lot of people from using it and from investing in it. And it's also hurt the government's finances. The government has bought about $100 million worth of Bitcoin over the past 8-10 months. At today's prices, those are worth about $50 million. So you see a decline of about 50% on their Bitcoin holdings. There are some signs that some businesses are accepting it as a currency, although the vast majority of them seem not to be at this point. And among those that do accept it as a currency, it's a very small percentage of their sales that are actually in Bitcoin.
Sonali, what about here in the United States? I know that there are some Bitcoin ATMs here and there. You might find them in a bodega in New York City, for example, but are people actually using them?
It's a great question, Emily, because, for example, the other day I had a conversation with Nouriel Roubini, who is, of course, known as a macroeconomist and works a lot on emerging markets as well as the U.S. economy. And the question here was, why do you need Bitcoin? Remember, he's a Bitcoin skeptic, and why do you need Bitcoin when you just have fintech? I think it's a great question, especially when you have the U.S. government really cracking down on Bitcoin, on whether it's a secure and other tokens, whether it's a security or whether it's a currency or a commodity. And you look at what happened in El Salvador, and the idea of using it as legal tender really starts to define it as a currency in some ways. So the question then becomes, are other networks like the Lightning Network taking off in a bigger way as companies start to use it more? To Michael's point, whether you're in El Salvador or you're in the United States, that price fluctuation has been really scary. Now, there's another aspect here. This all comes as other currencies like the dollar are rallying, putting other emerging markets in, what my sources call severe stress, people who bank a lot of countries in the world. And so if that is already an issue, not Bitcoin under pressure, but other currencies, then you have a dual issue here for a country like El Salvador.
Interesting. Michael, what is El Salvador's government? Why are they doubling down, even though the price is under so much pressure? Why are they touting this success?
Yeah, I think, from our interview yesterday with the finance minister, I think he really sees it as a new technology that has potential in the future. And I also think, one of the things that he told us was that it has brought in some levels of tourism, some levels of foreign investment. Some of that has come in via cryptocurrency exchanges, cryptocurrency digital wallets, different companies that provide different types of cryptocurrency infrastructure. And El Salvador is also a country that relies extremely heavily on remittances sent home from migrants that live mostly in the United States. Those migrants send home money usually via MoneyGram or Western Union or some of these traditional sources of money transfer services. And so I think the government is trying to save Salvadorians fees on these transfers through Bitcoin and through things like Lightning Network, which tends to be a little bit cheaper than using the actual blockchain on-chain transactions. But we're starting to see some of these more traditional companies actually come up with ways to try and compete with that. MoneyGram announced a project with a USD stablecoin to try and transfer money faster via MoneyGram's network from the US to El Salvador. So it is true. I mean, if you use something like Lightning Network, you probably can save money on this. The thing is now these more traditional networks are starting to come up with ways to compete with that and make it cheap and fast as well.
And you think about so many of the people, Michael, who want this to work in El Salvador because it shows you that Bitcoin has another use case in payments and it can become more seamless over time in terms of transactions and payments. I think back to this University of Chicago white paper on just how many El Salvadorians don't even have mobile to use this as a means of payment. How much is there still friction, and how is that keeping or helping other nations go by the way of what El Salvador has done, like the Central African Republic, which is also adopting it in a bigger way?
Yeah, I think one of the problems, when you're in San Salvador and in some of the big cities, I mean, it is fairly feasible to use this technology. Most people have smartphones, and most companies have means of accepting electronic payments. The problem is when you get outside of San Salvador into some of these really rural areas, and to sort of really poor areas where people are working on farms and working as fishermen, they don't always have the technology to be able to adopt this kind of thing. So, I mean, in those areas, cash is still king. So there is, and there is a big learning curve with this kind of technology. It's very new to a lot of people, even in the developed world. So when you bring it to a country like El Salvador, which is still developing in a lot of areas, the learning curve is even steeper.
All right, so fascinating. Michael McDonald, who covers El Salvador and the big crypto bet there. Thank you, along with our own Shonali Basic.
Thank you.
All right, coming up, more on Apple and Amazon's results. We've been listening into the calls. We'll tell you what has developed. This is Bloomberg. It was another big day of earnings with both Apple and Amazon reporting quarterly results and both coming in strong. Let's wrap it all up with our Ed Ludlow. There must be a sigh of relief among tech investors today.
That's definitely the consensus from the early sell-side notes that we're getting, that, you were bracing for something to go wrong with Apple. And it was a mixed bag, right? Good iPhone performance, poor Mac wearable services performance. But what's so interesting is Apple suspended guidance, and yet you spoke to Tim Cook, and I don't know what Apple's definition of guidance is, but he gave some really clear indicators of how things are going. In China, things are getting better. June was good. The supply chain is improving. Revenue growth will accelerate into the September quarter, fiscal fourth. So that sounds to me like things are really improving, and investors like what they see based on the after-hours reaction.
Right. He also said they expect revenue to accelerate in the coming quarter, even though we're seeing these macroeconomic headwinds. As you said, iPhone strong. He also said iPad demand was really strong, but that was impacted, along with the Mac, by supply constraints in the quarter, though supply constraints are significantly improving.
And they're being prudent, right? He basically said that we're in a recessionary environment. We're going to continue to invest in the future bets. And it seems like he's talking about augmented reality, maybe electric vehicles. We don't really know that side of the story, but also be disciplined, right? And it kind of backs up Mark Gurman's reporting on the slowdown in hiring.
He used the word deliberate, that they would be deliberate about spending.
Yeah.
What about Amazon?
Amazon, by all accounts, smashed it. Everyone's so focused on Prime because of what Walmart and Target told us. And, Prime Day fell outside of the quarter they just reported, but subscriptions were up. People were paying, even though prices were higher on subscriptions. But forget about Prime and remember the cloud. It's all about AWS. And I think we have this chart that just tells the story that no matter what the world looks like, AWS continues to be a juggernaut. It beats on the top line. It continues to support operating income. The worry for AWS was that a lot of its customers are tech startups. And yet, look how well it's performing. So Andy Jassy seems to be putting a lot of eggs into that AWS basket and moving the company from its dependence on Prime.
Huge bounce in Amazon shares after hours.
Yeah.
I mean, how are we expecting investors to react to this when trading reopens?
Friday's going to be a big day, not just because of the market cap of Amazon. It has a big weighting on the major indices. But I think there is a sigh of relief of the staying power of these companies, and frankly, that there's faith that managements can get us through worsening economic conditions. And this is kind of like Brad Stone put it, the start of Andy Jassy's big turnaround. So we'll see.
So what are the earnings to come that we're going to be keeping an eye on?
Yeah, I think, now we move to the software providers. We've had the big mega caps. We've had all the consumer-facing companies. What about all these pandemic-era darlings, the software names where everyone piled into 2020, 2021, and where perhaps corporate spending is being pulled? And, the chip story is just getting started. We've had Qualcomm. We've had Intel. What about the rest of the sector? Because it's been a muddy week.
Right. We will be watching. Okay, Ed, thanks for breaking that all down for us. That does it for this edition of Bloomberg Technology. We've got the CEO of Intel, Pat Gelsinger, Friday to talk about earnings and also the CHIPS Act. Stay tuned for that on Bloomberg Television. And of course, check out our podcast wherever you get your podcasts. I'm Emily Chang in San Francisco. This is Bloomberg.